Hi, here's the easy way I record my finances to guarantee I reach my goals. But before we begin, as a disclaimer, I am by no means a licensed financial advisor or analyst. I'm just simply sharing what I've learned over the years. Please keep this in mind and conduct your own research while practicing due diligence. Though I will say that I do have a degree in business administration and I majored in financial management. Also, I'll be speaking from the perspective of a young professional, though the concepts in what I'm sharing can still be applied regardless of the context of your current background. Here's the one thing you have to keep in mind when recording your income and expenses to reach your goals. You can't improve what you don't measure, and that's our main principle. So, how do we start? You gotta have a concrete goal. For this example, I'll be saying that my goal is to save my first 10,000 in a year. When making goals, it helps to be specific, measurable, achievable, realistic, and timely. SMART is a mnemonic for the criteria used to establish reachable goals and comes in handy also when running businesses or project management. Now let's break that goal down. 10,000 in 1 year would mean saving about 833.33 pesos monthly. Let's round it up to 834 to make it simpler. So basically, every month, I'll only need to set aside 834, which is about 27.8 pesos daily. Now, you know how much you need to save. When looking at it this way, it makes the goal more quote unquote affordable versus the lump sum of 10,000. It helps make the goal be something more attainable since it helps you take the first step and doesn't force a huge leap when you're really just beginning. How to reach the goal. Again, going back to our main principle, what we can't measure, we can't improve. So, if we want to improve our finances and improve our chances of reaching our set goal, we have to measure what we do by keeping track of our transactions. The easiest way I've found to do this personally is by using an app which ensures that even if I'm on the go and don't have my laptop with me to input my transactions into a spreadsheet, I can still track what I spend and what I earn in real time or in the way that is most convenient to me. The three types of transactions you'll need to record are as follows: your income, expense, and your transfers. The income is the money that you earn or receive, whether that's from your allowance, salary, or cash gifts. This is your cash inflow. Expense is the money that you spend. I also include money I lend to people as expenses. Usually, money you lend to others is considered an asset, especially if the interest earned covers inflation, but I generally find that in day-to-day scenarios, it is close to impossible to retrieve money I lend. So that's why it's considered an expense and not an asset in my books. See the land of no return portion of my first video. Any losses that are charged to experience, like if an investment didn't give the expected return or if you lost your wallet, are also considered an expense. This is your cash outflow. The transfer transaction is the money that you simply move from one account to the other. It will still be helpful to keep track of every transfer made so you know why your accounts have the balance that they have even if you haven't spent or earned anything lately. Implementation steps. So let's say on a monthly basis, I earn a net of 18,000 pesos. Tip. For the first month or two of recording your transactions, just spend as you normally would because our target here is to see what the pattern is. The pattern will show you what expenses keep occurring throughout the month, which is your fixed expenses, and it will also show you which expenses are there at one time with a certain amount, but the next time it's a different amount or isn't present anymore, which is called your variable expenses. You will also be able to see why you seem to never have enough left over, as it's common to not know you're spending so much on a certain commodity until you have records to show it. Every month, you will need to start making your projections after your initial phases of data gathering. So now let's look at my hypothetical expenses. For my fixed expenses, it's rent, electricity, water, internet, load. For my variable expenses, groceries, wet market, miscellaneous shopping expenses. We'll keep it simple. Let's say that I have roommates and only have to pay 2,500 monthly on rent. The same goes with my electricity, water, and internet bills, which I also share with my roommates. Though I won't have the same amount of utility bills monthly, I can more or less gauge how much I'm going to spend. Let's say that after dividing the electricity with my roommates, I usually pay around 500 in electricity and my share for the water bill is around 200, with my contribution to the Wi-Fi bill being 350. So every month I can expect to spend approximately 1,050 for my utility bills. As an allowance, since these figures can vary, I would bump up the budget to 525 pesos more, as I give an allowance of 50% just in case. I'd be expected to set aside 1,575 monthly for utilities. For load, I'd utilize promos, spending 90 pesos weekly, for example. So every month, I'd spend 360 for load. The pattern for fixed expenses is that on a monthly basis, I spend around 4,435. Now, when I look at my grocery and wet market expenses, I paid 4,000 pesos in the first month when I completely ran out of toiletries, laundry detergent, bathroom cleaner, and so on. Then in the next month, I didn't spend at all, as I still had what I needed. For scenarios like this, I like to take in averages. So 4,000 divided by 2 months will average 2,000 monthly for groceries. For the wet market expenses, I find myself spending only around 300 weekly, with lunches usually sponsored by the office. By the end of the month, I'm expected to spend 1,200 to feed myself. My varied expenses are projected to be at 2,000 average plus 1,200, which equals to 3,200. So now we take the projections after our initial data gathering, which has now become our budget allocation, and we subtract that with our net home pay. 18,000 minus the fixed expenses of 4,435 is 13,565. 13,565 minus the variable expenses of 3,200 is 10,365. Then, I like to take out a free to spend fund just in case an expense comes up that I didn't expect, which I usually put at 20% of what's left after I pay for my needs. 20% of 10,365 is 2,073, though I'd bump that up to 2,500, which is just a personal preference. So now I have 7,865 left. Going back to the goal, I can see that I have enough to cover for my savings target. If I didn't have enough, I would see that I either needed a new job or that I needed to have a sideline to stay afloat. It shouldn't be the norm to never have enough money to get by. You deserve better, so you're going to have to strive to do better. Warren Buffett was famously quoted for saying that in managing your money, you have to save first and spend what's left. I found that I'd like to cover all my needs first and mandatory bills to pay, as when I focus on saving first, I tend to target higher amounts past whatever goal I set because I'd feel the need to keep more money with me. That approach has led me to skip meals to get by or to take the 2-hour walk back home because I didn't have much left after I saved. I like to approach handling money now as a means to a better living, so I cover all my expenses first, then I see how much to save. After I save, I'd invest, then whatever is left can be spent on my wants. Now, several factors will differ on a case-to-case basis, but more or less this is the foundation I found to help me record personal finances, and it has helped me reach my financial goals every single time. It's valuable to be mindful. When you know exactly what you're dealing with, you'll be able to make better informed choices. The basics of using Money Manager to record transactions. Let's go into our record keeping process. You can use a spreadsheet if you'd like, but again, I'll be using the app I've been regularly using the past few years. The important thing is to record your transactions daily in the way that is most convenient to you. Here is the home screen of the free Money Manager app. What you're going to want to do first is to set up your accounts. There are different account groups, though for my personal use, the groups I utilize are cash, accounts, savings, and investments. For cash, I use different subcategories as I never put all my money in one place. So here I'll put in cash in wallet and cash in envelope. For accounts, I also have different subcategories. My accounts are money that I keep in the bank for spending purposes. Part of the subcategories is my payroll account. For savings, even if it's also kept in bank accounts, I don't generally spend it, so it's organized under a different category. And the last category is investments. Each investment I have has its own subcategory. At the very beginning, you will need to input all the cash and assets you have. So let's say that I did net 18,000 for a month. Automatically, that 18,000 is debited into my payroll account. So I'll input that. Let's say, for example, that I'm starting from scratch and there's no other money or assets to count besides that 18,000 that I netted. Then I'll need to set aside money to my personal bank account to cover my foreseeable fixed and variable expenses for the month. So that's 3,200 and 4,435. Then I'll withdraw 2,500 from my payroll just in case I need to pay for something and cards aren't accepted. To input these transactions, you have to record it as transfers. So for my budget for expenses, I'll transfer 3,200 plus 4,435 from my payroll to my personal bank account. Then, I'll transfer 2,000 from my payroll to my cash in wallet and the 500 from my payroll to my cash in envelope. I would then transfer 834 monthly to my high-yielding savings account so I can reach my goal of 10,000 savings in a year. Let's say that I wanted to invest in a mutual fund and found one that only needed 500 pesos in monthly contributions. So I transfer 500 from my payroll to my investments. Let's input the aforementioned example transactions, but first we're going to have to set up our outflow accounts. And now you have a way to keep track of knowing how much money you have and what transactions cause your balances to be the way that they are. You now also have an overview of your progress towards reaching your goals, which in my case has been the way to guarantee that I reach it every time, since I know whether what I'm doing is working or if I need to adjust my strategy. I hope you find this insightful, and if you did, feel free to share it. If there's other questions you have or other videos you'd like to see in the future, do let me know by leaving a comment down below.